4.2% nabbed on EU last week. An absolute textbook ALG. The same strategy we've been trading for over 4 years now. And now he's definitely proven to have the longevity, especially in these markets today. These markets are not easy by any means, boys. But you can still find those diamonds in the dirt. And ALG is an example of that. Anyway, boys, enough of the talking. Let's just get straight into it. Boom. Here we go, boys. This is the EU trade that we had last week. Now, before I get into the actual trade and going through it, I just want to say I've been trading this strategy for over 4 years now, and the longevity in the ALG strategy is absolutely insane. I know a lot of people have probably heard about the ALG strategy. A lot of people have tried it, tempted it, said it's shit, said it don't work. But I've only been trading it for a few weeks or a month or maybe even half a year. Even a year, in my opinion, is not enough to actually learn about how a strategy works fully and actually get sufficient enough data to understand if it works or not with you. Now, all I'm going to say is this strategy has unbelievable longevity. I've been trading it for over 4 years on my funded accounts. Me and Lou, loads of my members as well. So, yeah, this plan isn't just something that come overnight. It's something that has been forged over years in order to actually dictate the best win rate for the London session. Because, boys, there is one big move that happens during London and New York session. If you're able to catch that move, you are laughing. If you're able to invalidate if the move isn't there, perfect. You're going to see yourself in a real nice situation where you've got a nice longevity, should I say, within trading, which is key, right? We're here for a career, boys. We're not here just to make short monies and then go do something else, right? We're here to make a career, right? That's what we've been doing for the past 4 years, really. I've been building this strategy to the point where it's fucking bulletproof. Now, anyway, boys, let's get straight into it. So the 5 things I need for my plan initially, okay? Well, not initially, but the 5 things I need in my plan is 1, a high time frame bias, right? That is going to be from a fundamental perspective and also a technical perspective. You cannot understand the market fully if you don't know where each economy is going. I don't mean every bloody economy in the world. If I'm trading Euro USD, I need to know how the US economy are doing and also the European economy. It is very key to understand that. The best way to get a bias for a currency is through their economy, not through the charts, through the economy. The charts is definitely helpful because obviously technical analysis is something that was brought into the 90s. A lot of traders loved technical analysis in like the 90s, early 2000s. And when it came into play, obviously people started noticing there was shit that happened previously and that you could actually see some form of pattern within the charts, right? But again, even those big institutional traders don't just rely on that technical. They rely on data and how the economies are moving realistically and which one is stronger than the other. That's to get a really clear bias, boys. Remember that, please. Please fucking remember that. Do not ignore the fundamentals because it's something that I've been telling everyone to do for years now, and so many people are just too lazy to want to do it, right? But you need to understand the fundamentals behind the market. So fundamental and technical bias, right? Higher time frame target is very, very, very key as well, okay? And again, I'll get into that with this trade. I'm not even going to explain it now. I'm just going to get into it so I can give you a proper example within the markets. Prior day equilibrium. In terms of equilibriums and overbought and oversold, the prior day range is absolutely insane for that. And I'm going to go into that through the trade. 4 is the Asia session. How did the Asia session trade? Was it accumulative? Did it encapsulate liquidity? Or did it just continue price on and therefore have no liquidity? So we probably won't see a London reaction, right? Very key to understand because that's how you can invalidate a trade before you get manipulated. And that is very, very key for this strategy. Because we're not jumping into every time price grabs Asia's high or Asia's low. We're obviously dictating whether if it's going to move up or it's going to move down. And if it takes Asia's high and we're bearish, then beautiful, we can sell. But if we take Asia's high and we're bullish, we're like, okay, cool. We know price is going to continue here, so we're not going to get in. And that's how we save ourselves from getting manipulated within the London session. Because the London session is a very manipulative thing. Asia has been manipulated over the years through London session for ages, boys. It's something that's been in the market for ages. It's not something that has just come about because social media come about. Asia manipulation, or I should say the London manipulation is a thing. It has been a thing for years. Look it up if you need. Fact check me if you need, but it's all there. All evidence is there, boys. So this is why we trade this bulletproof London strategy. And then number 5, obviously the London reaction. How does London react to taking Asia's high or taking Asia's low or whatever it may be? And again, we'll get straight into it in this video. Right, let's just get rid of everything. Right, I'm going to... Now, you know what? Let's just get rid of that. No, yeah, we'll keep it. We'll keep it. We'll keep it. We'll keep that there. And let's go back in time. Let's get rid of everything. Let's go back to Asia session. Let's go back to 6:30 because I want to go through exactly how I trade, boys. I don't want to leave a thing out. This is going to be raw. I'm not going to fucking cut it or anything. This is going to be raw. I haven't even tried to record this again. This is the first time recording this. I promise you I'm going to give you the rawest fucking video for my strategy. Okay. So the first things first, right, is we need a bias. We need a higher time frame bias, okay? Which is very key for us. Now, what I normally do for my higher time frame bias is I normally go to the 4 hour. The 4 hour for me is a perfect intraday higher time frame. Daily can be a little bit high. I like using CRT daily candles. But in terms of looking for daily bias, 4 hour is perfect, okay? So as you can see here, I'm just going to go through structure blatantly as it is. Higher highs, higher lows. Simplicity when it comes to technical analysis, boys. Right, so as we can see, we've got... Let's just go back to the range down here so we can get a full picture of what's going on, okay? So we've got a high here. Sorry, a low there and a high there. Perfect, okay? Cool. And now we have another low. We break the high. We got a brand new high for us. And again, same thing. We completed... essentially this schematic here, filled the imbalance and continued up, and now we took external, okay? So now we are looking for price to continue. Really, our low is here, actually. So our new low is here, and then our new high, as we can see, after we broke structure, is here. So our current trading range before, obviously, today, just ignore today, ignore everything that's gone on within this week. This is our trading range, okay? So as soon as we break out of this high or this low, we are now looking for a new range. If we break out the high, we are continuing structure to the upside. If we break to the downside, we are reversing and price is going to start coming to the downside. So what we knew, okay, on Tuesday is that we broke that low. This low was broken. As soon as that low is broken, we was looking to sell. Not only that, is because I partnered it up with my fundamental analysis. And obviously, what do we know about the week commencing? I think it was what, the 17th to the, it might say here, to the 21st. I think I'm right in saying that. 17th to the 21st, okay? So this week, we had a very risk-off market. And what risk-off means, okay, is the market is uncertain. Most institutionals at the time of risk-off markets will buy safe havens, okay? And that refers to gold, that refers to the dollar, that refers to the Swiss franc, that refers to bonds, most government bonds, mainly the US government bonds. So yeah, when the market is risk-off, it holds on to safe havens. So we knew we was bullish dollar, okay? The reason why we knew that is because we know the market is risk-off, okay? When you're in a risk-off market, you don't normally see the euro or the pound thrive, you see the dollar thrive. So for me, trading EU and GU, perfect opportunity to go for shorts. And as I said, Tuesday broke structure to the downside, right? It changed character, if you may. Okay. And then not only that, we are risk-off because the market is uncertain around the European economy and around the whole economy, really, like all economies, realistically. So we're clutching onto those safe havens. Pardon me. It's clutched onto those safe havens, and the dollar, obviously one of the most favourable assets right now in terms of safe havens, was booming. So we want to go for shorts. We have our technical and fundamental reason to short. And now I'm going to say this now, boys. Every single day, wake up in the morning at 6:30 and figure out if the markets are risk on or risk off, okay? If you can find that out, you are golden, boys. And again, anything asking here, boys, we have a Discord, we've got Instagram. Feel free to text me. Feel free to jump on a call if you need. I don't charge for you boys to just jump on a call and ask me a few questions. I know how difficult this journey is, believe me. So do not hesitate to drop us a message, man. We're always here for you guys' support. Anyways, cracking on with it, mate. Stop blabbering on, you bastard. So, okay, we've got our bias. Right, did I realise, did I get rid of it? No, I still got it. Perfect. So, bias. We can tick that off now, okay? Higher time frame target. So higher time frame target really refers to areas that we want prices to go to, okay? Now, when it comes to a higher time frame target, it isn't necessarily an area where I'm looking to target, okay? I'm not looking for my TP to hit this target because whenever we have a target, boys, right? whenever we say, oh, I reckon price is going to grab this high, do you think it's wise to long up to that high, or do you think it's wise to long to somewhere just shorter so you can ensure you hit profit? Because bearing in mind, if we're in bearish market, right, the targets I'm really going for are liquidity levels, right? I don't necessarily want to be going for massive daily, weekly, monthly, external highs or lows, but I would love to know where they are and where price is moving to, so again, I can get a good recollection. Because again, we can be bearish on the higher time frame, but doesn't mean price is going to go up, right? Just because we're bullish doesn't mean price is going to go up. That is a really key thing to understand. The market never moves in one direction. Never. Ever, ever, ever does it move in one direction. It will always have, as what most people call, a retracement. Or in other words, I like to call it an exhaustion phase, right? This is a time when we have a drop off, okay, of the buyers, okay? We've got exhaustion. So what we see here is we normally see price come into some form of area of interest, which could be a fair value, could be an order block because there's orders there, or whatever it may be. And then once we get price trickle down into this area, we see the continuation of the buys. So just because we're bullish doesn't mean we're always coming up. We could be in a scenario where we are retracing. Fucking hell. Okay? And that is key to understand. So we know on the daily time frame, okay, our external lows is this Friday low. Okay, that's what we know. We're going to get into the equilibrium after. But what I was mainly aiming for this target was the liquidity level on yesterday's Asia's low. Sorry, it's not. That's not true. It was last week's New York session. Literally bang on a week prior was my target. Was this low here. The reason why it was my target, okay, is because if we go to the higher time frame here, we have a beautiful bit of imbalance here. So if price wanted to continue up, it would continue up from this area here. If it wanted to continue down, it would just continue down, right? That's the key thing to understand. So I either wanted price to come to this imbalance and continue, if it wanted to be bullish, or just continue down. But if my TP's here, I'm definitely going to hit TP, because we could definitely reverse at this point. So I don't want to be aiming for too much and be in my trade for like a day, 2 days. And as you can see, boys, that trade hit TP. I think it was like within an hour. We'll go through it after when we're actually going through the actual trade itself, but I'm pretty sure it TP'd in an hour. The efficiency was insane. And we nabbed 4R. Boys, I average 3 to 4% a month, okay? And that is exactly what makes me eat on these big funded 6-figure accounts, boys, okay? So, anyways, let's get our checklist back. So, higher time frame target. Our higher time frame target is essentially this imbalance, right? Because like what I said, price could either come to this imbalance and reverse, or it could just continue, break the low and come for this low. My higher time frame targets are all within this area, okay? I'm only aiming for this. I'm only aiming for that. And you're probably thinking, Mace, you're missing out on so many profits. No, boys. No. I've been trading for so long to understand you need to take a piece of the pie. Don't try and eat the whole pie, because you will get fat and greedy as fuck. And I promise you, you're going to be in very long-lasting trades, and it's going to take a huge toll on your psychology. I've seen it throughout the board with so many fucking traders, boys. Don't be too greedy. Understand that low RR isn't shit. 4 RR to me isn't even low. For me, a low RR would be 2R. For me, that would be low. Anything above, huge bonus. But yeah, we got a higher time frame target, right? So bias, check. Higher time frame target, check. Lovely stuff. So 1 and 2 is done. Now we are looking for the prior day. Oh, sorry, gents. Now we are looking for the prior day equilibrium. Okay, very key for me to understand if we're overbought and oversold. And plus, prior day is a very good range. If we look at the prior day range, it's literally New York session. It's literally the New York session. So in other words, we're looking to continue that. Okay, so we have 1, the prior day high here. 2, the prior day 50 here, and 3, the prior day low. These are my three lines essentially, right? These are the 3 lines I mark out. Easy as that. And then obviously, how the prior day equilibrium works, if you don't already know, is if we're above the prior day 50, we want to sell. If we're below, we want to buy. Okay, it's very simple, right? Very fucking simple. Not overcomplicated. Very simple. And the reason for that is because of discount and premium. If we're in the top 50%, then we are in the premium. If we're in the bottom 50%, we're in a discount. And boys, where would you rather sell? Would you rather sell at a premium price or at a discounted price? I, on God, hope that you went for a premium price. If you buy, okay, I'm going to explain this shortly because I'm going to go into premium discount. If you buy 10 bananas for £100, right? So that's £10 a banana. If you realise later on that that a price per banana has gone up by 50%, you'll be looking to sell at that point. So you might have to wait for price to go up. That might be because of maybe a hype in demand or a shortage in supply, but there'll be a reason for price to move, right? So, but you need to get yourself in the right area so you can make the most amount of money and have the best entry, okay? Very, very key. That's why equilibriums for me are absolutely needed. And the prior day is so perfect, man. So perfect. Anyway, so as we know, we're bearish, right? We know we're bearish. Fundamental and technical analysis, we know. We got our targets to the downside. This is our main target for our trade, just that liquidity level from the prior week's New York session. And again, could have even aimed for this low here. No reason why you could not have. But I mean, we'll get into the different targets at the end. So what we're really looking for now is for price to come into this imbalance. And push above this Friday 50. The only reason I say push it into this imbalance is because the Friday 50 is here. So like what I said, we continue down and then we normally get the exhaustion phase where we sort of get a few people pushed into getting in buys and then we see the market drop off and manipulate those people there. Manipulation is everywhere, boys. These markets are minefields. Make sure you are ready for success, man. So anyways, let's continue price on. So right now it is 1:45 in the morning. I'll still be getting my Zs in. Let's get into the point where I'd wake up. So I wake up at 6:30. I always jump on a call with my members. I'm not going to get into that. But I always jump in a call with my members at 6:30 to 8:30, right? So we can understand the market together and get some good trades. So we found out, obviously, the market was risk off and we was bearish and we had the perfect Friday aligned with us. This was fun. Right, let me just add, this was actually beautiful, man. This was beautiful. But yeah, so we knew what we had to do from the get-go. We was in the risk off markets. We're bearish. And it looks like we're climbing up towards that Friday 50, which is perfect. And now, what I love about Asia session, right? You're probably saying, right, but Mace, Asia session continued. But the thing is, what happened within this Asia session was literally just exhaustion. Okay, we had liquidity at this low here, the Friday low, and also at the low of this Asia liquidity. So as soon as we grabbed that Friday 50, I was looking to buy, man. I was looking to short. So anyway, let's move price on. Obviously, we had to do some waiting, as you always have to do. But now at this point here, we get price have an insane reaction, okay? And also on this morning, we had pound news. I'm pretty sure we had. I've got it up here. We had pound inflation news, which come out higher than expected. Still lower than previous, but higher than expected, which boosted the pound. And normally, when you see bullish pound, you normally see money come out of the EU. Come into the UK, vice versa. If we get good European data, normally get money taken out of the UK economy, put towards European, to the EU, right? That's normally how it works. So that's why, again, we was double excited because we had bearish news at 7, which told us that we're pretty much weaker on the euro than the pound, all right? We're strong for the dollar, so this looked lovely, right? And then obviously in terms of entry, boys, what we are currently looking for is... Actually, no, sorry, I've skipped a little bit out. Let me get this back over here. So Friday we got Asia session, like I said, is perfect, right? We're still within the yesterday's liquidity. We've not grabbed the low. We've still got loads of sell side liquidity here, and also we got a high made at just after 6, right? So we look perfect for price to come up, to come down. Number 5, the London reaction. What we want to happen for the London reaction is to sweep, especially in this scenario, is sweep the high and then trade through a 5-minute IFVG that we can buy back to. Okay, so let's go to the lower time frame. As we can see, we swept all that late Asia liquidity. We get our rectangle. We mark out our fair value gap, our bullish fair value gap. But obviously, the way we're using it is by inverting it. So if price essentially continues up, gives us our fair value. If it closes below the fair value, then it shows that we are looking to be bearish because we're not reacting to any more bullish fair value gaps to continue up. We are breaking these lows. And Not only that, is if you're someone that looks at more structure instead of fair value gaps for the change here, then we've also actually already broke this low to the left, which again is a structural change on the 5-minute time frame. So we look amazing to sell. Everything is aligning. The stars are aligning, bruv. They're aligning. We look good. All right. So all we got to do now is enter, boys. That is it. That's all we got to do. Most of our analysis comes prior. Okay. Most of our analysis comes prior. 6.6 pip stop, and then I aimed for this low here. So it was like that, New York. There we go. Perfect. Again, you could have aimed for that prior day low. Still would have got just under 3%. Could have gone for Asia's low. Could have got 2.79. But obviously, we were so weak that I wanted a bit more of a further target. But not far. But not too far again. I don't want to be aiming for stupid trades and be in it for so long. It's the last thing I want, man. And trust me, it takes a massive toll on your psychology. Let's get this down because I did actually have this on the New York session. So okay, perfect. So now we're entered. Now what we want to do is walk away from the charts and just essentially let price do its thing. And again, the reason why we walk away from the charts and don't do anything is because right now, nothing's going to invalidate my trade. The only thing that's going to invalidate my trade is if we come and take my profit. If we take profit before entry, cancel limit, okay? If we, I mean, that is the only reason we'll be cancelling limit. If price just continues pretty much and just takes our TP without coming to entry. Okay, so right now we need to be patient, right? We need to be patient. We can see price continue down, and this was perfect. I mean, I can't even actually stress to you how perfect this trade was, man. But everything was left on, and then we see price finally come back up to our Asia, to essentially our reaction area where we wanted price to come to, and then to a T, and also actually did enter us as well. Thank the Lord, didn't it? Pips normally FTMO didn't get entered, but EU this got entered. ACG this got entered. So now let's actually look how long it takes to TP as well. And then obviously from there we get a lovely efficient move to the downside, and we saw price fall. And why? It's not because of technicals, it's because of fundamentals. And we gathered all this information before London Open. Right? We knew we was bearish for the euro. Okay, from 7 AM we was bearish from the euro. We was risk off from the start of the week. Alright, so we knew dollar was bullish. We knew all of this information before we took our trade. Okay, and before we started actually taking Asian liquidity, we knew what we was going for. All we needed for is everything to align, and when it aligned, we attacked. And what happens when we attack? We fucking won. We don't jump into the markets too early. We do not get manipulated, boys. There is so much manipulation that happens, right? But I promise you, you can dodge a lot of this manipulation, right? There is so much manipulation during London and New York session. If you are someone that finds yourself constantly getting manipulated, take a step back. Realize that you need to analyze the market before you fucking jump into the trades, okay? And I mean have a full idea of what's going on, where price is going to, how strong is this economy against this economy, and then you can actually dictate a good trade. So ALG strategy is beautiful, but ALG strategy wouldn't be anything if I didn't have the fundamental understanding of how the market moves. And that is the keyest part. And this is why institutions always have an edge over you retail lot. Or me. I mean, I'm retail, but I finally actually understood how the market fucking works. But how the institutions have an edge over you is because they can manipulate you in getting into trades. Because they know you're looking at technical analysis. They know it. They know that for sure. And they know you're not looking at fundamentals, right? So they will take advantage of your funds, and they will take it, and they will take it every single day. You'll slowly get manipulated until you got fuck all left, all right? So dodge that manipulation. It's not easy. I'm never going to say anything in trading is easy because everything's mainly discipline based. Everything seems simple because everything needs to be done a million times in order for it to actually be played out in action. So everything is somewhat simple, but you need to do it many, many times in order for it to actually, for you to understand it, right? So yeah, this was that trade, boys. This was a beautiful one. Fucking hell, this video is going to be about 25 minutes long. But I wanted to deep dive into it, boys, because I want you guys to understand how I look at the markets and essentially how I can dictate whether a currency is stronger than the other. We are Forex traders, boys. We trade the FX market, right? If a currency is stronger than another, we need to know why. and we need to know how, and we need to know how long that is going to last for. If we could do that, we make our small increments in between. And what I mean by small increments is trillions of dollars get traded through these markets a day. If we can take our couple of £1,000 every week, we are chuffed, right? Now, boys, before you guys go, I want everyone to just note this down, right? These markets are very difficult at the moment, but the way to have your edge over them, okay, is by understanding how the markets actually work. And understand if one economy is stronger than the other. That is so key, boys. And if you man have any questions, like what I said earlier on in the video, do not hesitate to drop us a message on Instagram, drop us a message in our Discord, drop us a message on this YouTube, drop a comment. Fuck it, drop a comment, boys. I'll reply to every comment you man have. And if you want to further jump on a call with me, we can do that. But boys, I appreciate you, man, for this next case study. I tried to do it in as depth as possible. If you guys think I missed anything out, again, comment below and I'll let you know. I'll let you know. But boys, I'll see you, man, in the next one. I fucking love you all, man. Peace.